Hi, Tuesday, July 12th, 2016. Maneko64 here, home of alternative economics and contrarian views. Just covering today, I want to cover in this video the stock market. The Dow is done very well today, has traded to an all-time high of 18,364. We're now 18,340, up 120. Gold has been hit hard. Especially today, yesterday as well a bit. We're down $23 at $13.32. And considering what gold did after non-farm payroll, which was very positive because it dropped sharply after the number and then it rebounded and closed near the highs of the week. Most people, you read on the weekend thought, wow, gold is going to do really well next week, early next week, and it hasn't. And I wasn't too convinced as well, because a lot of times when that happens, the market managers, they think they can manage the market. The central banks, they come in and, spoil the party, so to speak. But I think it's all temporary. It is counterintuitive that we've got the BOJ hinting at helicopter money. The Europeans now talking of a possible bailout of the banking system in Europe, 150 billion euros, even though that would be breaking the rules, the EU bail-in rule that came out on the 1st of January this year. But Italian banks are in such deep trouble that they could, a collapse of Italian banks would collapse the whole of Europe. Well, especially the French banks, who have big exposure, apparently $250 billion exposure, loans to just the Italian government in terms of Italian government bonds. But yeah, so the reason also I'm making this video is that there's an interesting story that's just come out on Zero Hedge, and it says the mystery of who is pushing stocks to all-time highs has been solved. And it's by Tyler Durden, Zero Hedge, and he says, one conundrum stumping investors in recent months has been how, with investors pulling money out of equity funds at last check for 17 consecutive weeks at a pace that suggests a full-on flight to safety, as can be seen in the chart below, which shows record fund outflows in the first half of the year, the fastest pace of withdrawals for any first half on record. So, and then he goes on to say, there's a chart, and I'll put the link below to this article, and it says, are these the same markets trading at all-time highs? We now have the answer, and he continues. Recall that at the end of January, when global markets were killing over, that Citibank's Matt King showed that despite aggressive attempts by ECB and BOJ to inject constant central bank liquidity into the gumfable global markets, it was the emerging market drain via reserve liquidations that was causing a shock to the system, as net liquidity was being withdrawn in the process, and in the process stocks were sliding. So, and then he goes, fast forward 6 months when Matt King reports that many clients have been asking for an update of our usual central bank liquidity metrics. What the update reveals is a surge in net global central bank asset purchases to their highest levels since 2013. So, he goes on, to explain how central banks have actually been increasing massively their purchases of assets, and it's the highest since 2013. So now, yeah, we can understand how, stocks are at all-time highs, despite the fact that, there's so much trouble around the world. You've got the not only Italian, the European banking system in trouble. You've got the British pound, collapsing, falling quite a bit after Brexit. You've got Japan desperate that they're talking about doing helicopter money. You would think, that stocks would be a little more cagey. But the problem is that they've been able to raise the U.S. indices, the S&P and the Dow, to new all-time highs, but the FTSE, for example, is at 6,682. The all-time high is about above 7,000, and a lot of the European indices as well are well below all-time highs. So we'll have to see, you know, how if they succeed in convincing the investing public that, you know, to go into the stock market. And I wouldn't be surprised, you know, that if central banks didn't coordinate this yesterday and today, you know, to sell, you know, gold through COMEX. You know, I made a video earlier how, you know, central banks have volume discounts with COMEX. So I wouldn't be surprised if they're selling gold futures and silver futures, and at the same time ramping up equities. Interesting. It's frustrating, but I think if you look at the bigger picture and the fact that the banks, not only in Europe, but in the UK and the US, are still in deep trouble, so much trouble that central banks had to keep rates at zero. And even at negative rates, you know, the bond yields are negative. If you look at that, you know, in the fundamental picture and the fact that things are not going well, you know, you just, yeah, look at that big picture and, you know, remain your own central bank and have physical gold and silver, you know, as reserves. Of course, you might need some money in the bank to pay bills, but keep it at minimum. And yeah, that's it. So central banks buying equities, trying to, you know, to fool the world. I don't know how long it will last. If you enjoy my video and analysis, please like, share, and subscribe. Take care. Bye.